Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here is your daily technical analysis of LME 3-month copper and aluminium.
LME 3-month copper. An interesting bullish closing white Mariposa and second bullish white soldier yesterday. It was a follow-on higher from the previous session's bullish opening white Mariposa, but it set a number of new and interesting precedents. It was, for example, the second consecutive close over the long moving average, currently 83.95, and indeed used the long moving average as the base of the move higher yesterday. It was also most definitely back up over the lower bull channel line, currently at 82.78, of the broken bull channel, which is 82.78 to 93.65, and it's highlighted in dark blue on my daily chart. This move on its own has not as yet mended the broken bull channel, but it has gone away to try and mend it. The cap on the market was a combination of declining short medium moving average, currently 85.35, and the nearby 50% Fibonacci line of the October 2020 to March 22 move at 85.56. However, these two are separating, and thus their potency individually would be less than when they were combined. This brings me to my question posed 2 weeks ago, and I quote, whether the market will react the way it did back then. This bit actually refers to the move back up in early January when the market last broke higher over the long moving average. So whether the market will react the way it did back then and move up to the 85.50 area, because if it did, then the broken bull channel would have repaired itself, at least to some degree. Thus it all depends now on what happens at the broken lower bull channel line. End of quote. So further up, we have resistance at the April 2012 high at 86.65, and then the declining medium moving average, currently 87.30. So far today, a lower open and a dip down to the long moving average again before pulling back up. Though we're not as far as yesterday's high or close so far, and looking like an indecisive doji cross, maybe a spinning top, maybe even end up as a hammer, a hanging man pattern even. LME 3-month aluminium. A bullish opening white Mariposa and second bullish white soldier yesterday. It was a suitable follow-on higher to the previous session's inverted hammer pattern. The market has also been showing higher highs in recent days, bar one, which should be turning some of the technical analysis indicators higher. However, all this is fine, but we have a number of things going on all at the same time in the bigger picture. There is the big November 22 to May 23 head and shoulders top, which initially looked like a possible continuation pattern, but seemingly turned into a topping pattern. This has a primary target X down in the 2058 zone, with a much harder to reach target X1 down in the 1858 zone. Next, there are the two possible descending triangles and their relevant targets below. The first and larger one is from the late February to May action. This utilizes the neckline of the same big head and shoulders top, which is colored in purple at its base, currently at 22.71, and the late February to date downtrend, also colored in purple higher up, currently at 24.41, to give a primary target X2 below in the 21.78 zone, and a secondary harder to reach target X3 down in the 20.88 zone. Next, there is the smaller optimized descending triangle, highlighted in dark blue on my daily chart, made up from the small, late March to early May head and shoulders top neckline, currently at 22.96, and the optimized late February to date downtrend, currently at 23.86. This was entwined with the declining medium moving average, currently 23.65, but they have since separated. Anyway, this had a primary target down at 22.33, a target that's already been achieved, and a harder to reach secondary target X4 down in the 21.74 zone. Then there is the late February to late April bearish Andrews pitchfork, and one that I had been showing the bearish angle of attack of this market as an indicator. This pitchfork is highlighted in bright red on my daily chart, but I suspect the market may be becoming disenchanted with this one. Finally, there is the most recent pattern or patterns. It is the mid-May to date action, and the question it poses is whether the moves are for a triple bottom or a possible reverse head and shoulders bottom. The The former is the more developed, but I do not rule out the latter, not yet. Now, so far today, a reactionary move back down. What looks right now like a bearish harami and possible bearish opening Black Mariposa, even a possible bearish double. For a change, we have a lower low, but also a lower high. Though, for the moment, the market is back within the main body of yesterday's range, even after pushing down through it earlier.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final important bit.